Good afternoon, everyone, and welcome to the Monday Open. My name is Mark. I'm from Vantage Markets Australia, part of the private client group here. I have my colleague with me, Jeff. We're actually both up in Sydney. We had the crypto convention on Saturday and Sunday. It was a big event. So today we'll be going through the usual, what's happened last week in the markets, what's upcoming this week, some technical analysis at the end, and also some Q&A. I'll pass it over to Jeff to kick it off.
All right, g'day everyone. Mark, nice to have you in Sydney with us. Last week we had UK CPI, that's the inflation read, that came in slightly higher than expected. The interesting thing about the UK is that the UK MPC, Monetary Policy Committee, that's the equivalent of their RBA, they don't have an inflation target. So inflation affects sterling, but not the same way as it would affect other currencies. Despite that slightly higher than we were expecting CPI number there over in the UK, we are still of the view that they are going to continue easing rates there. They're easing at the moment based purely on trying to stimulate their economy rather than trying to get rid of any inflation that's there at the moment. Last week we also had our US initial claims. That's a weekly number. That was close to expectations. It's actually been very close or slightly better than expected pretty much every week for the last 6 or 8 weeks. Looks like the economists are actually starting to earn their money and getting that right. Excuse me. It's the eternal tension between people who trade and economists. Traders do and economists talk about it. But that was close to expected and didn't actually have very much of an impact on the dollar. It only really has an impact on the dollar if it's somewhere between 8 and 10% away from expectations. So there's one to keep in your back pocket if you're looking at data over there in the US. If it's more than about 8 or 10% away from expectations, that's generally when it's going to kick the market one way or the other. Last week we also had the Australian Crypto Convention. That's why Mark's still in Sydney here with us. That was in Sydney at the International Convention Centre. Thank you to all of our clients who popped in and said hello. It was nice to meet you in person, and it was a good event. Obviously, I think the organisers would have loved to have had Bitcoin actually tick over that $100,000 level per coin. Didn't quite get there, still hasn't got there, and is sitting just below. So that wraps up last week. The big events for this week, we've got the Australian CPI number. That's a quarterly number here in Australia. That's our inflation number. I think the big four banks are all pretty much still not expecting any rate move in December here in Australia. And there's no meeting in January. So February would be the first opportunity for the Australian RBA to cut rates here. But honestly, the comments from Michelle Bullock lately, the governor, she hasn't been very dovish. She's been fairly hawkish to neutral.
Do you think if that ticks higher, they'll less likely reduce rates?
That's a good question. No, you know what? Honestly, I think that the next move on Australian rates will be down. I just haven't decided when it's going to be yet. Yeah. I don't think there's a massive urgency to do it.
I think these numbers will be important. If it ticks lower, or if the inflation is seen to tick lower, then the RBA would likely decrease rates, which is weighing on the Aussie.
Well, remember, you have to look at interest rates everywhere in the world from non-COVID levels. Around COVID, interest rates everywhere went close to zero. And that's not the natural area for rates to be. So, I think in Australia, the natural kind of average or long-term average was somewhere between 3.5% and 3.6%. So, that's going to be, if that's going to be the down move, we're not that far away from there now. So I don't really think there's any sort of urgency to do it. And I think the currency market, the Aussie dollar is holding up reasonably well. So I don't think that, the market's expecting massive rate cuts out of Australia. On Wednesday, we've got the New Zealand rate announcement. New Zealand, we were talking in an internal meeting today, and I said that New Zealand, the central bank over there, always seems to get their interest rate decisions right. They're always on point when they start their easing cycle, and they're always on point when they start their hiking cycle as well. There's very little, you'll never see anything in the press about the RBNZ being behind the curve, which means they're being, reactionary to market moves. So they're a little bit proactive. And I think obviously the Kiwi dollar is a very small currency in terms of the global float, but it punches above its weight. And I think the reason it does that is because the RBNZ is seen as quite strong.
That's right, yeah. Well, they're expecting a 50 basis points cut. I think if they come out and cut by 25, that will probably have a short-term effect on the New Zealand dollar. Maybe we'll see a bit of a rally there. If they do cut at 50 and they come out dovish, then we might see it break that support level heading down to about 55. I'll show you that later on in the technicals.
All right, good. My gut feeling on that is that the RBNZ will do 25 as a cut. I don't think they'll do 50. And the last major focus for this week is GDP numbers coming out of the US on Thursday. That's Thursday night global time, so that'll be so that's Thursday night global time. We've got that number. That's a big number that will really kind of determine what the Fed will do with interest rates going forward into next year. The market is very keen for the Fed to cut rates. A lot of that's priced in. We actually saw US 10-year bonds get to about 4.5% on Friday in the States, and there was massive buying of US 10s at 4.5%. That seems to be where the market appetite is for the 10-year bond over there in the States. So there's that. There's also, keeping in mind, this week is a shortened holiday week. We've got Thanksgiving holiday in the States on Friday. That is a stock market and bond holiday. So the stock market will be closed, the bond market will be closed, the currency market will be open, but only the really junior guys who couldn't get the day off are going to be at their desks.
Probably see some choppy price action there.
Yeah. All right, so next slide, we've got technicals. Mark, you want to talk about technicals?
Yep. All right, so we'll cover the New Zealand USD, then we'll move on to Bitcoin and do a bit of gold afterwards. So we're starting off with the New Zealand USD here. So you can see consolidation, range-bound market ever since around June. You've seen price sort of bounce from here, support, resistance, and most recently we're at the support level here. We made a low of 58 cents roughly. And you can sort of see a bit of support building here. I guess the catalyst for this one will be the RBNZ rate decision and whether they come off as dovish or hawkish afterwards. So it's going to be sort of the decider here. If they cut by 50 basis points, which is expected, then they come off dovish in terms of more aggressive rate cutting in the future. We'll probably see this break down, maybe test this support area here, and potentially even coming down to this level here around the 55 cents region. So we got the NAB and Westpac. They're basically predicting it to go down to 55 cents. There was an article in Bloomberg on that one I was reading. And if you go to the 4-hour chart here, yeah, sort of a bit of a gap this morning. Sort of saw USD weakness, but again, yeah, I mean, this probably won't move until Wednesday. You won't see some price action until then. Potential targets, if it does go up, first target will probably be around this area here, around the 59 cent region, and then second targets will probably be around the 60 here. You could draw in a Fibonacci retracement. I'll go back to the daily chart for a second. So if you draw Fibonacci from this high here to that low, so it's, yeah, around second targets, you see the 38.2 retracement around there. So yeah, we'll see what the data says. Moving on to Bitcoin now. So most recently, I mean, we all know it's been consolidating. We've broken out. We've retested this area. The catalyst for this up move was US elections, the expected pro regulations on Bitcoin. So yeah, so the markets are essentially expecting regulations on Bitcoin to be relaxed. That's why we've seen so much demand for it. It has sort of approached that 100,000 level here. It hasn't quite touched it yet. We are sort of seeing some profit taken, not much, but it's sort of struggling at that point here. There might be some big sell orders at this point here. Profit taking, it is a psychological level, but we also do see a trend line here as well. So we'll probably have to break this trend line before we can sort of see a further breakdown here. However, if we do sort of come down to this trend line, find a bit of support here, we could sort of continue to the upside. If we go back to the daily chart here, we can draw a Fibonacci retracement from this low here to that high, and you'll see a sort of 50% level around here. And you got all these other levels here. But if this thing does sort of sell off, we may see some support level around this area here. And then, you'll just see if there's any sort of buying confirmation if you were to buy at that level. But we need to break that trend line first on a 4-hour chart before we can even come to that area. So
it's kind of stuck a little bit in no man's land at the moment, isn't it? I mean, everyone's been talking about 100,000 for it for years.
Correct, yeah.
And it's sitting right there now. If everyone's been saying it's going to get as high as 100,000, you wouldn't probably want to buy it here. I reckon it might actually have a bit of a dip until, like a significant dip before bargain hunters come in on it.
Yeah, you never know. I mean, when this thing drops, it drops quickly. Remember, like it drops very quick. So
everything does.
Yeah, it might even have a dip. Yeah, this is a big psychological level. So you'll see all the long holders here potentially taking some profits at this area.
We have a market saying that markets go up by the stairs and down by the elevator, and I think this is definitely going to be one of those cases where it actually kicks off.
We'll see what happens. Moving on to gold now. Gold's been very interesting. We made a high of about 2,790. Then came US elections. We had a sell-off here. We broke the EMA 2020 moving average here, and then we came back up. And we're sort of retesting this area here. So pretty much around the election, sort of where the prices were during the election. This rally, by the way, was due to geopolitical tensions with Russia and Ukraine. Again, gold is a safe haven when things sort of escalate, with wars and stuff like that around the world. Gold generally does go up during that time. If we do sort of see that escalation fizzle away, we could sort of see a sell-off. We are sort of seeing that now because, I mean, these are pretty big candles here. We do have a resistance level at this level as well. So if we did have a sell-off, potential targets could be around 2,600 area here. We may even sort of see gold consolidate for sort of a longer period of time between this range here. I remember back in I think it was 2017 to 2020, Jeff was consolidating for about a few years. So
gold is a funny commodity because it has periods of massive trending impulsiveness and then very long periods of sideways nothingness.
Yeah, that's right. Yeah.
Excuse me.
But anyways, this one is we're gonna have to see what happens with the Ukraine and Russia. If the war sort of doesn't escalate as much there, you'll probably see a sell-off here. That's about it for technicals. We can move on to the question and answers now. So,
just before we do the questions and answers, I just wanted to mention that for those of you who were watching and saw the dollar move and the gold move this morning in Asia, that was because Donald Trump had anointed Mr. Bessent as Treasury Secretary. Treasury Secretary isn't really a position that we have here in Australia, but it's an extremely important position in the US Cabinet. That Treasury Secretary person is across all tax policy and all foreign policy. So he's kind of like the most senior diplomat. The chap Bessent that they picked used to work with George Soros, currently owns or manages a hedge fund. And the reason for the move was because he has been on record as saying that he is pro-tariffs. So I think I mentioned last week how tariffs affect markets. Generally speaking, when one country puts a tariff on another, they generally retaliate by putting the same tariff on. So it's all a zero-sum game. And then you have these trade wars that anyone over about the age of about 40 is going to remember from back in the 70s. Excuse me. No one really wins. So that's where we're at with tariffs. It's a 1970s policy. I'm on record as saying that. So in terms of the Q&As, these are questions that we've had from clients over the week. And sometimes when they're particularly good questions, we like to share them with a broader audience, which is here. So that first question, Mark, did you want to take care of that one for us?
Yeah, sure. So what are the drivers to the price of Bitcoin? So generally this market's it's a pure supply and demand. It is sort of still an immature market. It hasn't been around for a while, like currencies and stuff. But generally it is purely supply and demand. It does occasionally act as a safe haven during times of uncertainty, but it's still sort of unknown what sort of drives it. But generally it's supply and demand, I would say.
All right, cool. Yeah, I mean, there's no economic data that pushes it.
Yeah, correct. Yeah.
All right, so question 2, I'll do that one. And I get asked this one a lot because my clients will know that I like to combine fundamental analysis with technical analysis for my trading. Question 2, what are the best news sites to keep an eye on? That's to keep abreast of what's going on in markets on a fundamental basis. We have an economic calendar on our website. I would suggest having a look at that. If you're looking for an economic calendar that is a little bit more sortable and a little bit more customizable, Forex Factory has a really good site for that. On the equity side, for equity market news, you get that period where there's equity or company announcements in terms of earnings per share and that sort of stuff. Market Watch is the best place for that. That's marketwatch.com. I always keep Reuters, the website, up. The stuff that they give for free isn't as time sensitive as the very, very expensive subscription that you can get to Reuters. But it's generally a really good idea to keep Reuters up because it'll keep you abreast. They've got reporters in every country of the world and they are letting you know exactly what goes on. And they purely report. They don't editorialize. So you'll get it in terms of factual information. My personal favorite website is one called the Drudge Report, Drudge Report. He used to be a staff writer for the Washington Post, started up his website, and what he does is he goes through all of the mainly American, but also the American and the UK newspapers, and he'll put up links to all of the important headlines. So if anything's breaking, you'll normally find it on Drudge pretty quickly. He stops updating that in our morning, obviously, because he needs to sleep and he's a one-man band. But that's a good one to look at. Also, keep an eye on CNBC and CNN. They're good ones for us. And one of my personal favorites is Forex Live. Forex Live is a Forex-specific website where they keep market news updated. When there's data, they normally put it up there as well. So I think that's us for today. Good to have you in the office instead of talking on the phone or talking via the web. Thank you very much for seeing us today. This content is just a part of the suite of the content that we have. Most of that content is updated to our VIP trading room, which you can access through the client portal on our website. It's available to all clients. Mark and I are logged into that all day long. And we also have several analysts from the Everest Fortune Group in there as well. They can provide some analysis and they can answer questions too. We also have our weekly technical video that is uploaded to that the VIP trading room every Monday. And we have our private client daily update that Mark and I write every morning that is either emailed or also, again, updated to the VIP trading room. So thanks very much, and we'll see you next week.
See you all next week.